Now, today, I thought we would talk about something which I know is really near and dear to your heart. And I've been reading a lot about this. I've been seeing on Quora, I see a lot of blogs written about it. There have been people who've written some nice, interesting calculators, which I'm going to share with you soon. And that is a question. How much should you as a founder be paying yourself? Should it be a lot or should it be little? Now, you probably have a lot of confusion about that, and there are negative effects depending on the number you pick, both in your social life and how people may judge you. So first off, the short version, the TLDR, is ramen salary. Ramen forever. Okay? Ramen salary basically means you pay yourself enough so that you can afford to buy noodles. Ramen. You get paid as little as you actually need just to survive. And this is the best guideline that you can ever have, because your incentivization is the ownership of your stock, and you have control of that. If you bootstrap, you'll own 100% of your company forever. So do you even need to listen to me? Listen to this video. Do you know what? If you are the CEO of your own company, you bootstrap, you have no investors. Just jump off, do whatever you want. But pay yourself what you need to and reinvest that money to grow your company. Because if you're working on a scalable business, which keeps on becoming more valuable, you're making an investment in the future, right? What about investor money? Okay, once you actually decide to go down this investor path, which is like this whole new little world, I'm thinking of Aladdin here, whole new world. You're thinking that money is free. It's not, okay? You have given away a stake of your company, probably between 15 to maybe 30%, depending, for that money. That money is not free, okay? You do not want to become addicted and reliant on venture capital money. You do not want to take it if you do not need it. Investor money is purely for growth, not subsidizing your wild-ass lifestyle, okay? When you're starting out a company, like you call up a buddy, like, hey, let's go build something, you should literally have no salary, because the only person funding it is you. So it's your own bank account. The whole notion of salary just doesn't matter. So if you're going to start up a company, ideally, you need to do something which is on your side, doesn't take up too much time, but you can validate it and figure it's going to work before you decide to quit your job. Or you saved up enough money for at least 12 months, which I know is quite a lot, but you're going to have to adjust your lifestyle. No more bottles and models partying out in London at Mahiki, right? Buying 15-pound zombie drinks, which are awesome. But anyway, okay, that's back when you're making the banking money. When you decide to go on this path of startup, you have to make sacrifice. And I'm sorry. So that does not mean high swanky clubs unless you're closing clients, which are more than going to cover the cost of that. So how much you're going to get paid depends on the stage where you're at. Now, I'm assuming we're going down the VC path, and that's the one that you decided that you want to do. So at first, before you're going to get funded, you're going to pay yourself out of your own bank account. There is no such thing as a salary because it's your money. Yes, you may take on debt on your credit card, and that will kind of help you fund there. Ideally, you've got money in the bank account, because if you're going to credit card, it's a pretty scary place to be right now. And also, given the way that the world has changed, it's not that expensive to build quite a lot of business models. So you've somehow gotten past this whole bootstrapping phase and start raising money from investors. Okay, so let's pretend you're going to go the path of getting into a fab accelerator. At no point do people expect you to be on the hook and the line to go bankrupt, okay? In places like Korea, you as a director are responsible for all the costs, and that's a really scary place to be. But the vast majority of companies, it's not quite so onerous on you. If things don't work out, fuck it, right? You shut down the company and it's dead and gone. Of course, you want to treat all your stakeholders, the people that backed you, as nicely as you can. But, you're not going to lose the house if you have one. So if you get into an accelerator, you're going to get between maybe at the super duper low end, 25K, but more talking 50, 100K. Now that money is not to fund your lifestyle. It's for you to grow. If you're in Y-Com, the only thing they care about is your month to month or week and week, actually, your growth rate. That needs to be 7, 12% every week. And if you're spending all that money on yourself, how are you going to grow? You need to hire people. You need to spend money marketing. You need to pay for SaaS services. How are you going to do that if you're taking all the money? That money needs to be built for growth. And if you're not going to grow fast enough, investors are not going to pay enough attention. So cool. You got out of your accelerator, or maybe you didn't go through one, and now you're going to get to the angel stage. So angel, right? You're probably talking something between, I would say 300K to maybe 700K. If you're, more Bay Area based, that could be like more 1.2, 1.5. These numbers are always changing, so don't really rely on it, but you know what I'm talking about, right? Now, they're going to give you money to actually show that you can deliver. And you have a defined runway. You know what your burn rate is. Your burn rate is how much money you are spending every single month. And it's going out the door. And you can talk on a gross or a net basis, which makes a deduction to revenue. But typically at that stage, you're probably not making very much revenue for that to be meaningful. Okay, so they're sort of the same things. So if you're getting paid $3K a month and you've got two other dudes getting paid $3K a month each, you're talking $9K. You've got your server costs, you've got your SaaS costs, etc. Maybe it's like another $1,000 a month. You're doing $10K a month. Now, on an annualized basis, you're doing $120K. That's your burn rate. So if you raise $300K on that point, sure, technically you might be able to last, 2-ish sort of years, but your burn rate is not going to stay the same. And that's just, 3 dudes sitting in a room eating pizza, paying their rent, right? I'm not talking any meaningful money on customer acquisition costs or anything that you really need to do. As soon as you start doing that, that runway is going to run all the way down. So do you want to have 5 months of splendor building this product, which apparently is going to take you 7 years to get to exit? Or do you want to extend the runway as far as you can and build that product, build as much traction so that you can get the best valuation possible? Because seriously, investors are not in the charity game. It is way harder to raise money than you actually think. If you haven't raised money before, you're in for a world of pain and surprise. It is so hard to get money. So how much are you getting paid at your accelerator, like super duper early, like angel stage? Basically nothing, right? Maybe $1,000, could be 2,000, could be 3,000. It's up to you to decide how much you want to be putting in the business and building it. Now, honestly, I do not believe that you should be doing startup if you need a salary to pay for it. Go get a job, go save out the money, and then go start. Okay. Now, so you did your angel, and now you're going to get up to your seed, pre-seed, whatever. It's getting pretty fractionalized these days. So at seed, depending on how much you raise, things could change because you've got more resources. But does that mean that your situation on relying on investor money should either? I don't think it should. It's the same freaking thing. You really haven't validated all of your, builder thesis, investor thesis, if you will. And so you need to keep putting that money in to attracting talent, which will still probably cost you something, right? And building out that company, putting it into marketing, growing as much as possible to get in a position for, like your super strong seed, Series A, and, as we go on. So how much you'd be paid? Well, I can honestly tell you, it does vary a little bit depending on what country you're in, but at least say in Asia, like 4 Sing dollars, that's sort of what most of my buddies in Asia would expect to pay you. If you get paid more, yeah, maybe it might be okay, 5, 6K, but you shouldn't really be talking more than that. Otherwise, people are going to have real questions about you. Cool. So you somehow gotten through your seed, and now we're at Series A. Things are changing now, and I think it's pretty reasonable for you to have, a sort of normal salary. So if you are getting to the region of like 100K at Series A, I wouldn't judge you negatively on it. I think it should still be less if you can afford to do that. But around 100K-ish a year, I think is pretty reasonable. Your salary is such a signaling effect for your ability to recruit and negotiate with people. I can honestly tell you, and I do this all the time, when I am pitching to try and get great people on board, I actually tell them how much I get paid. I'll be like, dude, I get paid 80,000 or 100,000, whatever the number is. Do you think that you as the head of sales or VP of product or something should get paid more than the CEO? And like all that bluster they had was like, oh, well, in my company, I was getting paid 200K or whatever. They were at this big company because they're bored out of their freaking mind, right? They want to go join your dynamic organization because they can have a more fancy title. They can have a lot more freedom. They don't deal with bureaucracy. And those shares might be worth a shitload of money, right? And so when you are taking the bullet and keeping your salary low and you ask a question like that, it's like, Jim, Mary, my salary is 80K. You're trying to tell me you want to get 160, 200? Come on, do you really think you should get paid more than the CEO? It's amazing how suddenly all that bluster in the air just suddenly sucks out and just disappears. Now, of course, it won't work for everyone, but I can personally tell you I've done this a bunch of times, and it's amazing how people's numbers suddenly come down. I'm like, yeah, sure, Alex, I get it. I shouldn't get paid more than the CEO of the company if I want to be part of your company. Cool. So you somehow got past your Series A. You are a real survivor. Getting to your Series B is a huge achievement. At this point, how much you get paid isn't actually such a critical factor. People are not going to judge you too badly. You may be getting paid 200. I mean, like, who knows? But frankly, you shouldn't, in my opinion, get paid much more than you were at your A, because it really signals your commitment to the company. I mean, VCs, and they talk about this stuff, right, want to keep you lean and hungry, like focus on the company. So sure, you have equity, but they want to keep your salary low. And you want to keep your salary low because it's a great signaling factor for people that you're trying to hire. So you could conceivably be, depending on how big your B round was, even maybe do a secondary, sell out some shares, and convert that into cash so that you can pay down your mortgage, buy a house, whatever it is. That's probably a little bit more typical around Series C or Series D, but I think it's still important as a signaling factor for your company to keep your salary low. Now, right, you're somehow past Series B and you're still watching my video? Cool, thank you. You're a later stage company, doesn't matter, Series C plus growth, whatever. You hear about people like Eric Schmidt, Mark Zuckerberg getting paid $1 a year. Okay, that's not real. What that is signaling, like I keep on, I've been telling and repeating throughout this conversation with you. They get massive amount of stock-based compensation, and you really need to look into their filings for actually be able to see that, but they can publicly say that they get paid $1 a year. So I've kind of been alluding to this notion of people will judge you, okay? Investors will judge you. So when I see a financial model and it says in the HR sheet that the founders at like Seed Angel are getting paid $150 a year, I fucking laugh. Like seriously, I'm just like, these guys are living in cloud cuckoo land. I don't care about their financial situation. I just see that and I just see naivety. It's like printed on their fucking heads, okay? I have seen it a couple of times, and 99% it's never allowed, okay? I'll come back to an example of where I have seen it twice and it sort of has been okay. The salaries are about 120 a year, but that is not the standard, okay? Investors are judging you, and they probably won't even tell you. They'll just pass. They'll just think you're a joke, that you don't get it, okay? You cannot charge yourself, you cannot pay yourself vast amounts of money and think that's cool, right? You are not working for Google. You're not working for Facebook. You're not working for some big corporate. You're building a company. You are not entitled to a salary. So, let's say you are like, pitching for your angel or your seed round, and you're in the Bay Area, which, is typically for startup land, the most expensive place in the world, right? And it really, it is expensive. I personally don't think that you should set up there, but definitely like at Series A, you should move there depending on your business model, because the networking opportunities, biz DevOps are fantastic, right? So let's say, you are doing that early stage and you're pitching, you're like, hey, so I want to have $1 million, which is, definitely possible. And so I've got 5 people in my team. Like, okay, so how much are you getting paid? Well, everyone's on 150. I'm like, fuck me. Okay. So 150 a year each. You're talking 750K. Wow. Almost all your money will be done, and 75% of your money is going to be done 1 year in just your salaries. And $1 million for like an angel is kind of around. It's like, it's a lot of money. I'm really thinking, are you just like paying out to be able to attract talent just because you're not good enough to get the talent otherwise? Because like, if you have to just pay out just to attract talent, you're probably not really good at recruiting. You're probably not that great of a hustler, an entrepreneur, and that does matter at the early stage. Investors are thinking, I want to give you money and I want to see what you're going to get in return for it. So, if those guys are somehow going to blow out of the park and you can have that credibility, you can communicate that, then do you know what? Maybe some people might go for it. In the Valley, most places will laugh you out the door, or, if they're polite, they'll just say, thank you very much. Come back when you have more traction, buddy, and good luck with your 150K per salary each person. But ultimately, your money that you raise only lasts so long. So do you want 5 months? Do you want 18 months? If you want a big salary, go get a corporate job. Your remuneration is equity. Let's talk about Boohoo. I sent out a mailer last week to my subscribers for my newsletter, which you should totally join if you haven't. I don't do it very often, and I only send you really cool stuff. And I got feedback from 2 people, for example, that I want to talk about. The first guy responded in the weirdest freaking way possible. And what I said was, if you are, raising like an angel or a seed and you're saying your salary is 120K, like I laugh about that. And he responded to me and said, Alexander, you laugh about a founder in San Francisco with 3 kids and a wife who's only making 150K a year at Angel. I was like, yeah, dude, you should have saved up money to do that or be in a financial situation to be able to afford to do startup. Like, startup is not entitlement. It is not in the document of human rights. The second person responded to me, simply just said, oh my God, that's awesome content. Thanks so much for sharing, Alex! Exclamation point. I responded and shared what that guy had said to me from San Fran. This guy's in San Fran too as well. He said, guys just totally got it wrong. So, ultimately, boohoo. Like, if you are not in the financial situation to be able to do startup, no, like, there's no such thing as charity here, guys. It sucks, but you own the company, and that is your benefit and your reward. So now let's check out what other people think, right? So I know you're listening to me. I know a little bit, sometimes a lot, depending. But there's a lot of people who are a lot more famous than me that you want to hear from. So let's check out some research. So a company called Compass went out and collected salary data for, just over 11,000 companies. And they found some pretty interesting stuff. So let's check out what Peter Thiel has to say on this topic. The lower the CEO's salary, the more likely it is to succeed. The CEO's salary sets a cap for everyone else. If it's set a high level, you end up burning a whole lot of money. It aligns his or her interest with the equity holders. But beyond that, it goes to whether the mission of the company is to build something new or just collect paychecks. In practice, we have found that if you only ask one question, ask that. And this is backing up everything I'm saying. Don't think I'm a douchebag by having this opinion. Guys, startup's hard, okay? So let's look at some stats from the research. So we have founder salary overview here. 7,964 people get paid under 50K. And then we have all the little numbers down here of how much people get paid, all right? And it's a fairly even distribution, but you can see the vast majority of people are not getting paid very much money. Now, we'll look at by product phase. Are you at concept, working prototype, development, functional product with high growth, mature product, okay? For most of it, all the way up to limited growth, you're under 45K. It's only when you're growing like the clappers, which probably implies you're raising some pretty good money, that goes up to 63 a year, and then 70 for a mature product. And this is based off 11,000 startups. And we've got one more chart here. Your average founder salary by funding level. So if you raise under $500,000, you're talking 35K, which is even less than I was advocating for. If you do up to $1 million, you're at 38. Under 5 million, which I don't know, it depends on the country, but that's like a pretty big seed or a small Series A, you're talking 45. Under 10 million, 62,000. And if you raise more than 10 million, you're on 81K, which is way less than the 100K that I was talking about, right? There's a couple of VCs which I think are awesome. One is First Round Capital because they've innovated a lot around their platform and how they support founders. They're interviewing with a guy called Jason Calacanis, who I actually kind of personally like, although not everyone agrees with me. I hope he doesn't mind me ripping this off. So let's just quickly watch a little interview with Jason Calacanis and Howard Morgan.
Question, just to be very clear about it, is do we have any advice on what the founder's salary should be at an angel investing or Series A round? This is a great question. Howard, how do you approach it?
Well, at the angel round in particular, we look at what you can accomplish with the amount of money you're going to raise. And if we prefer to see salaries that are relatively low for the founders at that stage, which is to say between 50 and 100,000, depending on the city and what it costs to live rationally. We don't want you begging for food or anything.
Right.
You should take that into account. But you want to stretch the money. We often see founders take relatively low salaries. Once we get a Series A round, a few $1 million in the company, then we think you should go to below market because you've got a lot of equity, but still reasonable salaries. In that case, maybe 125. We don't ever want to see salaries starting with twos
Yeah.
in this. And then it depends sort of on experience, age, a lot of other factors play in there.
Sure. I'm going to have to go with that. I think as you get older as an entrepreneur and you raise more amounts of money, you have more capital needs, like say families and stuff like that. There's actually a double standard. People will look at it and say, you know what, to get this CEO, they've got a mortgage, 3 kids in private school, we're going to have to pay them $250,000 a year or $300,000 a year or $200,000 a year. And the VCs will say, you know what, we're going to bite the bullet on that. It's going to be the exception in our portfolio. Most of the portfolio makes $100,000 for a CEO, but we really want this guy or gal. I mean, you've had this situation.
That's when you're bringing someone in. If they're a founder, it's a little different. So if they're founding it, they know what they're signing up for.
Right.
If we have to bring in a great CEO, absolutely, we've had that situation. We try, and we often, or almost always actually, offer them the following kind of choice. You can have 175 and X percent. You can have 200 and X minus 1%. You can, and so on.
Right.
So you make the choice as to how much cash versus equity you want.
Right.
And we give you a range.
And it's a little bit of a tell.
That was interesting. So Howard introduced a concept which I didn't talk about because it's more of a later stage thing of what does a non-founding CEO get paid? Now, you're not going to pay that guy like founder salaries, right? Because the founders are still going to earn a whole bunch of cash. And so look at the actual founders of Google. They brought in Eric Schmidt. You know, they obviously gave him some pretty decent equity incentivization, but they paid him proper money too. Now, a fab blogger, Chris Jans, who works at Point 9 Capital, which invests in SaaS startups, did a interesting post blog, which I shared and I sort of alluded to earlier on. And I actually just want to show you the output of this in this blog that I kind of posted up here. And we've got a great little chart, which I've shown, which is the summary of his model. Okay, and what he's done is he's shown, depending at the stage you're at, how much money you're making, at least in ARR terms, because he's very SaaS focused, how much you should be doing. And this depends on your location. Do you have kids and various things, and sort of gives some ranges. Now, he says this is not scientific, but I think this is relatively reasonable, and it ranges anything between 50 and 200,000. As Howard has said, he doesn't want to see things starting with a 2. So I don't think this is properly right, but I think it's fairly decent. If you want to check that out, I'll put a link in the down below in the notes, and you can go check that out. Let's have a look at two comments, one which is interesting and one which is just funny. Ro Morehouse writes, the kids and location variables should not be applied in my opinion. I understand this is common practice, but it's a flat world. Global economy and kids and location are personal choices. Even when dialing numbers for founders to make ends meet, for example, my biz partner should not get paid $20 a year more because he has child support payments. And that 0.8x dollars on top just because he's an SFS, that doesn't seem reasonable. But of course, it's just a discussion. And so in Chris Jans' model, as we mentioned, there are variables about your location and whether or not you have kids. And I'm sorry, I know we live in this like hippy-dippy world where everyone's meant to be equal and let's, factor in all your personal decisions. But it's a startup. Why should you get paid more than anyone else just because you have decided to go down a different path in life? Which, hey, I'm going to say, kids are fantastic, but they also are cash drained. So should that really impact on someone else in a startup? We're not in France. Well, maybe you are in France, but hey, you decide. Now, the second comment I thought was funny, which is just a God bless the internet, is from Latrinius Washington. You should pay yourself as much money as you want. Don't take VC or angel money. Don't have answer to the white slave masters. Bootstrap it and tell Trevor, Todd, and Kyle to go back to raping drunk freshmen in the frat house. Thank you, Latrinius. You made our night.